Hey folks, so in this video, I'm just going to talk about the Fed's balance sheet. We can go to this website. It's basically going to be the Federal Reserve Bank of New York, and they're going to talk about their system open market account holdings of domestic securities. So this is basically the Fed's balance sheet. So we can see right here, they show us the amount that they're holding in treasury bills, treasury notes and bonds, floating rate notes, treasury inflation protection securities or TIPS, federal agency securities, agency mortgage-backed securities, and the list goes on. But anyways, we can see where the bulk of this money is. So right here, this is showing, hey, you know what? They have total holdings of about 8.15 trillion. And the majority of this is actually coming from the United States Treasury notes and bonds. So here we could see that there's about 4.7 trillion here. So this is where we really need to focus. So remember that T-bills are pretty short dated. They're not going over a year. It's basically everything underneath a year. Notes and bonds are like 2 to 10 and 10 plus years. So that's basically the situation here. So this is pretty much just telling us what they're holding as of November 9th. So we can flip through this to get an idea. So if they're saying changes from the prior week, and it's right here, this is 26 million. So if it's 26 million, then that's basically saying that they added 26 million. So we can go back 1 week. And then here, we can see that they deducted 33.8 billion. So this is basically their balance sheet shrinking a little bit. So these are things that we need to pay attention to. So I want to talk a little bit about quantitative easing. So we're going to go right here. We're going to look at Investopedia. Now, what is quantitative easing? It says right here, quantitative easing is a form of monetary policy in which a central bank, like the United States Federal Reserve, purchases securities from the open market to reduce interest rates and increase the money supply. So, pay attention to this. Reduce interest rates and increase money supply. So now you may have heard of the opposite, which is quantitative tightening. So quantitative tightening is essentially undoing all of this quantitative easing. So I'm going to show you what quantitative easing looks like. So we're going to flip back. We're going to go several months back. So let's go all the way back to let's go all the way back to September 29th of 2021. So if we're flipping through this, we can see very, very hefty numbers. So right here, we can see a change from the prior week, which is 85 billion. So they added 85 billion to their balance sheet. We're going to flip through a little bit more. So here, we see that they reduced it slightly by 5 billion. Here they added 19 billion. Here they added another whopping 84.5 billion. So this is quantitative easing, basically adding big time on the balance sheet. So here we're adding 30.7 billion. Here we're adding 11 billion. Here we're just subtracting 26 billion. Adding 11 billion. So you can see it kind of goes back and forth, but the big thing that you need to notice is these massive, massive orders. So this 90.5 billion. So that's big time. So now we're adding 31.8 billion in December. Last week of 2021, we reduced it by 32 million, or 32 billion, I mean. January, we added about 8 billion, 23 billion right here. Another whopping 80.68 billion. So, quantitative easing was still going on. So now I'm going to show you right here. So now we're in February. So now we get this 11.4 billion, this 3.5 billion, 50 billion. So this is a pretty big order, but it's nothing like 80 or 90 billion. So this is what I want to point out. this is the last large order that we see for 2022 thus far. So pay attention to this. That's 50 billion right there. And then now we have 15.8 billion. Now we're subtracting about 20 billion right here. We're adding about 3. And then this right here, 42.5 billion. This is probably the next large order that we see after that February order. So after this, it's going to be definitely slimming down a bit. So as you can see now here at the end of March, we're subtracting about 23.5 billion. Here in April, we're not doing a whole lot. So now we're adding 25 billion. So as you guys can see, things kind of go sideways for a little bit, not much happening. So now we're going to fast forward a little bit. We're going to go into September. So now here in September, 4 billion down, 5 billion up, and then now we see 16.7 billion down, 18.7 billion down. So in these 2 days together, that's a little bit over 35 billion right there to the downside. Now look right here, October, 37.9. So we just had about a little over 35 billion to the downside, another 37.9 billion to the downside. So, this is over 70 billion to the downside in 3 weeks. So now things are kind of picking up a little bit. So, you're going to see the correlation with the stock market here. So I'm going to flip a little bit more. So, now we're constantly cutting back a little bit. You guys can see definitely cutting back. We're not adding like any 90 billion or 80 billion amounts to this balance sheet. So this is quantitative tightening. And then right here, November 2nd, we see this reduction of 33.8 billion. So it's getting significantly higher. So here, November 9th, we didn't do much. Now, the next print that we're going to see is going to be on Friday. So today is November 17th. So tomorrow on Friday at 4:30 p.m. Eastern Time, we're going to get the holdings for November 17th. So let me show you the correlation with the stock market. So we're going to pay attention to the Qs, which is following the NASDAQ. So I'm going to go back here to that September time. So September 21st. So yeah, September 21st and September 28th. And October 5th. So we saw all of these massive reductions here. So let's start with September 21st. I'm going to go here on the Qs. Let's see, where is that? September 21st. So right now I'm on a weekly time frame of the Qs. Now you guys can see, we're seeing this massive reduction right here. So, stock market was falling quite a bit on this week of September 16th. And then we saw some follow-up selling, more follow-up selling. And then here in October, early October, we see a massive rally, but then it fades. And then we see another week of selling. And then finally, mid-October, we flip. So let's see if we actually see anything here in mid-October. So yeah, nothing really here in mid-October, but we were seeing quite a bit of selling in the balance sheet. So, can you say, hey, what? Is there a correlation there? So now let me show you guys something else. So let's go back to March. All right, so March 16th. This is when we saw probably the last large addition to the balance sheet. This was 42.5 billion. So now let's go back to March 16th. So yeah, look right here. So this is March 11th. This is March 18th. Look at this massive rally that we had. And then from here, this was just a dead cat bounce, and then we sold off big time. So, can you say, hey, you know what? Was this attributed to this massive addition to the balance sheet? I mean, it's hard to say, but, maybe we can see a correlation here, maybe. Because, I'm seeing a bit of a slight correlation. Now, let's go back in time a little bit more. And let's really look at when these massive additions started to end. So this was the last massive addition that we had, this 80.6 billion. So this was January 19th. So let's go back. Let's look at January 19th here. So January 19th was about this week right here. So this week right here. So this was the last massive addition. And then you can see right here, we sold off quite a bit, and then we kept selling off. So since this January 19th, we haven't had this massive 80, 90 billion purchase in the system open market account. So, you have to ask yourself, hey, is there a correlation here? Now, I believe that there is a correlation. And, for me, it's going to be interesting going on, what's going to happen in this next print now that midterm elections are over. Are we going to see some accelerated selling? Can we see 90 billion reductions a month on the Fed's balance sheet? So this is going to be a very interesting thing to watch. Now, if we do start seeing this massive reduction in the balance sheet going forward, is that going to correlate with the stock market continuing to fall? So this is something that we need to watch. This is something that we should think about. Now, I want you all to follow me in this pursuit and watch this with me. So I'm going to leave the link for this website down below in the description. So I hope you guys enjoyed this video and have a good one.